What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. As usual, today is Friday. It still is for about another 40 minutes, so I'm not late with this video. It seems like it's late. It is late, I'm sorry. But it's time for this week's installment of the 52-week challenge. If you don't know what that is, this is where I share what fractional real estate I bought each week and then invite others to share their, what they're doing as well. You can do that in the comments to this video. You can jump in the Discord and talk about it, or as a lot of people seem to prefer, you're welcome to DM me or talk to me offline in any number of ways about what you're buying. The point is for us to sort of be a virtual accountability group where we're not just looking at a lot of deals and not pulling the trigger. We're, making a commitment to at least every week try to pick up one token, one share, one LRO, something, so that we're not just spinning our wheels looking at deals and never buying anything. If you've been following along, it's rarely a problem for me. There's always lots of different stuff I want to buy. But there have been a couple of weeks where, I was getting a little lazy, maybe didn't pick anything up, and knowing about having to shoot this video did get me, to get off my butt and go figure something out and buy something. Groundfloor has always helped me out too, because I have the auto investor on, although hasn't been super useful lately. So anyway, let's get into it. What did I buy this week? I bought several more tokens in 9 Country Club Lane. They've just continually, there's somebody selling limit orders. I picked them up all right around $25 per token. With the limit order fees being lower and that price, I did a couple of videos on this one now. I just think it's unlikely that I'll get hurt at this price point. And I think there's a lot of potential upside. If you jump into that Discord on the, Lofty's Discord, and you look at this property specific channel, they have a lot of plans for this. If it goes as well as Earl and Noah are expecting, I think this could be a really great property. And if not, and we have to liquidate it, we're getting it at a great basis, right? $25 versus, and obviously, I thought that 50 was a little bit high. But at 25, I'm really excited to buy it. And so have been slowly picking up more as that's been the price. And let's see. There is a debt on it. It is, both in, I think it's in Noah's personal name. He's guaranteed it. And he has, I believe, like around $300,000 in additional collateral, which is basically where the bank has the ability to, take some of his, more liquid securities in the event that there's a default. So, I think it's a little bit better protection than we get on a lot of these co-ownership properties. Now, obviously, there is still risk. It's still possible that he's not able to pay, and then we have problems. But all those things combined with the price point has made this one that I've slowly started to accumulate in, and I probably will continue to as long as this is the price point. I mean, we'll have to see though. Maybe we'll get into the next few months and it doesn't do nearly as well as we thought. So we'll see. The next one, I bought some more tokens in Colfax. I haven't talked about this one in a while. At the moment, this one to me, and I want to back up, please like and subscribe. In the description to this video, I have links to all the places where I'm currently investing in fractional real estate online. Lofty being one of them, Mogul, Groundfloor, all the ones I'm talking about today included in that. Please do your own due diligence on all of these platforms. Just because I'm buying something on one of these doesn't mean that you should. Just because something seems like a good deal to me doesn't mean it's the right deal for you. So you want to make sure to do your due diligence both on those platforms and any of the deals that I'm talking about, right? I'm just trying to share what I'm doing, how I'm thinking about these deals, but it certainly might not fit your personal risk profile, so you want to keep that in mind. Also, in the description of this video, I have a link set up to a Discord channel where we talk about all different fractional real estate channels, or platforms. Feel free to jump in there. It's free to join. There's no sales phone. We're not trying to sell you anything. It is just a place for to build a community for us to all get better at investing in fractional real estate, and then also get together and approach just make sure our voice is heard as a group when we're, bothering platforms about way we think certain things should be changed. It's a good place for us to meet and talk about that sort of stuff. So feel free to jump in there if you haven't already. All right, back to this. So it strikes me as just an unbelievably good deal from a value perspective right now. Like, this was one of the most problemed properties on the Lofty platform. I think when I bought my first shares, I was buying them at like $8 and $9, or my first tokens. Market price is currently 21. I think I bought my most recent ones at around 20. There is a property so it's two properties in one DAO. And one of the two properties, we have a buyer. We're going to sell it to them for $165,000. And then we have some strange partnership agreement with them where if, they're going to renovate it, and if when it's done, it's worth more than a certain amount, then they'll actually will be due a little bit more money. And this is me paraphrasing. Obviously, you want to dig into that deal, look at exactly what it is. But also, we have an insurance claim on that building because it is like very trashed. It should be, after everything's said and done and repaired, maybe around $400,000. Well, we got insurance proceeds for like $270,000. And after the existing debts in the DAO, I think there's going to be like over $200,000 remaining. And, if there's $200,000 remaining, I think it's actually a little higher than that, but let's just say it's $200,000, and we divide it by the outstanding tokens. That's like $12.37 per token in cash, and we still have the second building. And that's ignoring the sales price that we're going to get. Like, it just seems so absurdly underpriced, and we've got that news of that insurance money coming in. I don't know that it's actually come in yet, but this token price hasn't moved at all. So this has got me thinking, do I want to start putting money onto Lofty again just to take advantage of this deal? Because it seems like we have cash that almost between cash and the sale price, it almost accounts for the full value, and then you're getting that building for free. So, excuse me. I am still recovering from the flu, like I mentioned in my last video. Sorry about that, but I just wanted to get this out today. It just seems like such a value opportunity. Now, these are not properties that I want to hold long term. They have been very difficult to keep tenanted. They've been difficult to manage. There's been vandalism and whatnot. That's what led to the huge insurance claim. But just from a pure value perspective, especially with cash in the DAO, it just seems like this price is way off. So I'm gonna just keep picking it up until it's overpriced. So that's everything I bought on Lofty. On Groundfloor, a very slow week. I only picked up one LRO, and again, this was just one using the auto investor bought it for me. I actually had more payoffs than I did. I think this is at 119 last week. So I think I'm going down now. I'm really hoping to get those numbers up and become more and more diversified on here, and then start putting more money into each loan. I've started to wonder, like, maybe that's not realistic. Maybe somewhere just north of 100 loans is the most diversification I'm going to get on here, and then I have to decide, okay, is that enough that I'm comfortable putting bigger chunks in? I think the answer is probably going to be yes. I haven't seen another big artificial payoff like what we had earlier in the year that made me real nervous about the platform. So I don't know, but I'm just letting it go at the moment. At some point, I probably will just bump up the auto investment amount. And then once it, eats through because now I'm just actually accumulating cash in the account, right? I think because the total sum of the LROs I'm invested in has gone down. Just because I've had more payoffs than new purchases. Anyway, just the one on Groundfloor. And then I did today pull the trigger on the Blitzen. This is the Mogul, single family pad split property in Phoenix, Arizona. This is the one that they're buying the single family home. appear to have bought it from a wholesaler. They're going to do the conversion themselves and get it up and running. I just liked this one a lot from the valuation perspective. I did put a video out about it earlier today. And you can see there is a little bit left. So if it's something that you're interested in, again, do your own due diligence on it. I think there are a lot of risks on this one. There's a lot of info that's not disclosed to us, as far as we don't know exactly, what the scope of work is for their budget. There's a lot of stuff that I'm just trusting Mogul to do well, right? This is, more that they've started to prove themselves to me. I'm just sort of trusting them on certain things. Oh, I'd love if we get a lot more disclosure and a lot more, a lot more transparency into some aspects of this deal. I think that, when I've talked to them, sometimes, some of the things I think they're more than willing to, and they work towards, being more transparent. And some of the things I think they think are, create some problems when, they're trying to negotiate and it's under contract and it's, and we're to give out too much info to the whole world. And then some of it is also, I think that they've talked about not all of their investors are like, me and you, who are doing, crazy due diligence or, more thorough due diligence on every property. And so the way they present info leads them to want to presenting a little bit more limited information, right? So they're sort of curating what they're telling you and what you're seeing. I don't love it, right? I'd like to see what the construction budget is, what the scope of work is. I'd like to see that in play. They said they have an as-is appraisal of $375,000. I'd love to see that appraisal, right? It looks like this one's already closed, so there's very little downside to sharing that with us. All those sorts of things. Hopefully, they as they move forward, they do more of that. At the same time, as they do more deals and they perform, which isn't a given, but if that does happen, I'll also just come to trust them more and more, sort of like I have so far. And they haven't had any big disappointments from them. Yes, I've had some properties underperform so far, especially some short-term rentals. I think that's to be expected. I've had some that have done much better than they originally projected as well. And so until I've held a lot of these properties for a longer term, it's, I'm not going to be getting too crazy. And again, I'm putting an amount of money into all these platforms that I'm willing to experiment with. If it all goes away, I'll be sad for a few minutes, but it's not going to hurt. It's not going to be the end of the world for me. And I think that that's the right approach whenever we have an industry like this, right? Where we've seen some big blowups already. Landa, a lot of people lost money on Landa. If you were an early investor on Lofty, I'm sure you've lost a ton of money. Or chances are you have. I mean, maybe you were, one of the people that magically picked one or two properties that didn't tank in value, or in that continue to pay out over the longer term. But in general, I think that taking a measured and slower, methodical approach is going to work. And as I get more and more comfortable with them executing on plans like this, I'll put a bigger chunk into each one. But for now, I did buy some of this one. It's the first one on Mogul that I've bought in a while. I passed on quite a few in a row. So I bought into this one. I passed on those two. I passed on those three. I passed on those three. I passed on those three. Yeah, it has been a long time. And I passed on those three. I almost bought into that one, but then I didn't. And then the Swift was the last one before that I had bought into. So it had been quite a while. Before that, I bought the Gilmore. I don't think I bought the Piggy Bank, or maybe I did. I'm actually not sure. I bought the Pinkman. I bought the Hugo. I bought the Ven, the Ratliff, and the Chelsea. So I was buying a lot of these at one point. I bought the Andres, the Victor, the Celeste. I think I bought the Johnson too. And the Mafee, the Wags, which has been problematic now, and the Axelrod. So early on, and the Road. So early on, I was buying quite a bit. It's been a little while though since I bought one, so it's glad to see that they put one up that I was excited about. But again, you gotta do your own due diligence. Decide, are you willing to take that risk that they're gonna be able to do the renovation within the budget that they think? Is it gonna be worth it at the end of the day? Are they gonna be able to run it the way they plan to? All that sort of thing. Anyway, that's everything that I bought this week. I'm curious what you bought this week. Put it in the comments. Jump in the Discord. Mention go ahead and feel free to share there. Until next time, I'm going to just keep making mistakes so that you don't have to.